Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. So we've got a bit of a correction in markets today. All of the main stock indexes, S&P 500, Dow Jones, NASDAQ, everything's in the red. Gold and silver in the red today as well. Now, a lot of this has to do with NVDA. The earning report for NVDA due out after markets here. And to be fair, let's get away from this silver chart real quick and just look at NVIDIA. It's down a little over 1% today. This company now, has a over $3 trillion market cap. It's trading at a 73 PE, so for every 73.74. So for every dollar of earnings, the markets are assigning a value of $73.74 to this company. So it's an incredibly high valuation, but they're going to have to put together a pretty good report here in order to justify this valuation. However, I think it's very important not to overlook the fact that the real driver of price action in these markets, it's not anything fundamental. It's not NVIDIA's earnings. It's not how productive AI is going to be. It's all about easy money, and that's why I view today's dip in the price of silver and the price of gold as well, which we'll look at in just a moment, as basically a buying opportunity. Now, it's important to note that this is not financial advice. I'm not telling anybody what to do. For some people, silver might not be the right thing to be buying, but I'm looking at this as an opportunity to acquire more physical metal. And, if we just look at the short term here, silver's in a pretty nice uptrend, even with this pullback dating back to the beginning of this month. Silver was down in the 26 range not too long ago. Today, we're at 29.25. And, I posted on X this morning when I saw the price of silver and the price of gold pulling back. I said this morning's pullback in gold and silver provides another nice entry point. Geopolitical tensions have not escalated. Massive deficits are in effect, and easy money is still right around the corner. And then, I got this response, and I get this a lot when I say that the dips in the silver price are a buying opportunity. I got this meme in response and this comment, yes, the never-ending buying opportunity in silver. Now, frequently, I have said that pullbacks in the price of gold and silver are buying opportunities. Now, I just want to zoom out here. And this red line here represents where silver is at right now. So you've got to go all the way back to 2021, February of 2021, to have a time when silver was at the price that it is at today. So I just want to point out that, every one of these dips that you see on this chart here, I was probably buying silver on those, and I was letting people know, hey, this is a good time to accumulate more metal. And I mean, you tell me, were those dips a good opportunity? Yeah, silver does have a lot of opportunities to get in because it's a volatile market. It's not as stable as gold. So the dips to the downside, they're more violent, they move faster, and that's why oftentimes they are a good time to accumulate more. Because again, regardless of what happens with NVIDIA, regardless of what happens with the broader markets, any fundamental factors, bottom line is more easy money is on the way. Gold also dipped today. Now, the chart of gold is still looking even more bullish than silver's. Gold clearly remains in an uptrend. I mean, it's still sitting near record all-time highs. It's over $2,500, but it is down today. Interestingly, this channel that it was consolidating in, it looks like once again it tested dropping back into that range today, but that price drop was met by a lot of buying. Were retail investors buying? I don't know. I mean, who was buying the gold? That's a good question, I think, but clearly somebody was. And so, gold is still looking very nice as well. Now, it's a good thing that we had a drop in gold today, though. If you are looking to acquire more physical precious metals, SD Bullion today just announced their first SD Bullion gold bars. They have these available in 1 ounce, 1/2 ounce, a 1/4 ounce, and 1/10 ounce sizes. Right now, though, if you just want to get a nice 1 ounce piece of gold with the SD Bullion logo and a flag and a cross on the back, you can get one for just $40 over spot. Right now, that's about a 1.5% markup. So very low premiums on these very nice bar. You can check them out with the link down in the description. Very convenient that this nice low premium offer came out on a day when the price of gold is down, because, I like to buy things when they're cheap. Okay, we already looked at NVIDIA. It's ridiculously overvalued, but hey, the earnings report, could it have some short-term impacts? Yeah, it's also possible that they release a good earnings report and we see everything bounce quickly tomorrow. There's a lot of things between market close today and the market opening tomorrow that could have a big impact on these markets and on the price of gold and silver. So let's take a look at those. First of all, CME FedWatch tool. Again, I mentioned that, easy money is basically still baked into the cake here, no matter what happens with NVIDIA. In fact, if the markets get hurt somehow as a result of NVIDIA's earning reports, I think that just increases the probability of more easy money out of the Federal Reserve. But you can see here the probability of a 50 basis point rate cut in September remains elevated at 36.5%. So rate cuts are guaranteed in September, essentially all but priced in already. It's just a matter of how deep they're going to cut. Now, this is a factor that has been driving the gold market, in addition to the fact that the Fed is getting ready to spin up the printing presses, is this massive central bank buying around the world. And I just saw this story that Poland and India now in the second quarter of 2024 tying each other for being the biggest gold buyers among central banks. And one bank that is sitting out right now is China, but central banks, Bank of Poland and India's central bank, loading up on this stuff because they know that the easy money is coming, right? They know there's going to be inflation. They also know that to the extent they hold dollars, there's a real risk there that if they, get on the wrong side of things geopolitically, they could be sanctioned. So de-dollarization alive and well, central banks buying up gold. When are retail investors going to get into the market? Well, probably soon, if you ask me, once it becomes clear what is going to happen to the dollar, especially after September and rate cuts, and especially after the election in November. Here's a piece of data that will come out before markets open tomorrow. It's the United States initial jobless claims. So these are reported on a weekly basis, but you can see that since the beginning of this year in January, this has been in a strong uptrend, and that mirrors a lot of what we have heard from the central bankers, Jerome Powell and others, how they've said that now threats to the labor market are beginning to come into alignment with threats from inflation. So again, they're going to cut because the economy can't handle high rates, and basically it's just going to be inflation be damned. Maybe they'll recalculate the CPI formula to understate inflation. They'll do something like that. But they're obviously giving up on the inflation fight, and with good reason, because the economy is going to implode. Now, the reality is that they have set things up in such a way that, barring massive injections of fiat currency, we will have a collapse. And, that's probably what we need, because all of the wealth that, quote unquote wealth that we have is primarily based on, massive accumulation of debt and huge amounts of currency being spent into the system. And, that's not sustainable. You keep having to do more and more of that to keep the bubble inflated. However, that's politically untenable. Like, what we would need is entitlements to be slashed, deficits to be massively reduced. We'd allow a lot of jobs to, go away, a lot of people to lose their jobs, a lot of wealth to be wiped out, because it's all predicated on a bunch of bad debt that was taken out when interest rates were kept near zero for more than a decade following the great financial crisis, and then a doubling down of that during the pandemic. So, that's politically untenable. When you start to see the jobless claims rising like this, it means they're going to print. Now, you've also got, in addition to the initial jobless claims, tonight we've got a speech from Atlanta Fed President Raphael Bostic, and his talking points recently at the most recent FOMC meeting when he was interviewed sounded pretty dovish to me. And, if we get, say, a nasty effect on the markets in after-hours trading as a result of the NVIDIA earnings report, they may be floating this guy out to do some damage control, and that could actually buoy markets if he comes out with some dovish talking points. And you've got GDP, the second revision, released tomorrow before markets open. Now, if the GDP is revised lower than originally reported, then that may have a significant effect on markets as well in a positive way, because we live in this weird dynamic where bad news is kind of good news. Again, it's all about what's coming next from the Federal Reserve. And if it turns out that the economy is not growing at the pace that was previously expected, well, the anticipation of more easy money, it's going to explode, right? So if we get a weak GDP revision, then that's going to be very bullish for gold, silver, stocks, all these assets. And think about what we got in the recent jobs numbers revisions from the BLS. They were 818,000 jobs originally reported that didn't exist. That number's probably fake too. I mean, who knows how many were actually created, but they are letting on that the data was not as good. So you could see something similar with the GDP. And then again, tomorrow, once markets are open at 3:30, going to get another speech from Fed President Raphael Bostic, another opportunity for him to wax dovish. Now, look, I mean, all of this is speculation to some extent in the short term. However, I do like to buy on days when gold and silver are down, so I do view this as a nice opportunity to accumulate some. Premiums remain low, spot prices dropped, and the reason I say that is because, look, I mean, gold and silver could drop more tomorrow. Great, I'll buy more. I will keep viewing all of these dips that we get as buying opportunities, because the one thing that is guaranteed in the long term is more debts and deficits, right? This is not being talked about by anybody. I mean, you hear the central bankers, the political elites from both parties during the election. There's a lot of finger pointing. There's a lot of, proposed villains when it comes to the inflation fight, right? You got corporate greed. You've got, the incumbent administration. Never mind the fact that the previous administration also contributed to a lot of this stuff. You've got them pointing fingers at everything, including the Putin price hike. We recently heard Powell mention that at Jackson Hole. He started talking about, the Putin price hike again. He had to bring that up, but you never hear them mention the fact that the federal government continues to spend trillions of dollars that it does not have, enabled by a central bank who is willing to slash interest rates despite the fact that inflation remains well above their target. And yet, nobody ever mentions this. Nobody ever mentions the fact that the Fed still has $7 trillion plus of mortgage-backed securities and U.S. Treasuries on its balance sheet. They never talk about that. They never talk about the trillions in QE. They never talk about the trillions in borrowed money, the $35.26 trillion in debt. They don't talk about the fact that the past three presidents have racked up more debt than all of the presidents before them combined. They never talk about that. So look, inflation is going to get a lot worse. Dollar's going to get debased. That's the long-term picture, even the sort of medium-term picture at this point. I don't think that we're that far away from a significant crisis resulting from this debt, especially when you take it against all the backdrop of geopolitical problems. Another reason, I mentioned this in the tweet that I talked about there, that gold and silver are dropping today, is I think a slight easing in geopolitical tensions. Over the weekend we had Israel and Hezbollah exchange blows, and yet it failed to escalate to a larger conflict, thankfully. But nonetheless, I think there still remains a huge geopolitical risk that maybe isn't getting quite priced into these markets yet. The Middle East is far from peace. You've got Ukraine and Russia escalating on the daily. You've got problems in the South China Sea around Taiwan. There's still a lot of geopolitical risk, and so these temporary downticks in silver because of NVDA earnings or because of a perceived lack of safe haven demand for gold and silver in light of geopolitical tensions temporarily de-escalating. Well, I'm going to keep stacking. That's all I have to say. So anyway, leave me a comment down below. Let me know what you think about all the things we covered today, and I will catch you next time. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker, out.